I've gotten lots of requests from my subscribers and other followers from my other social media platform asking me to create a video on the strategy I use to trade gold. Yeah, my gold strategy. So I've decided to give that out to you guys, and it's going to be more like a series. Yeah, I'll be dropping it on Tuesday, Tuesday and Friday, like for 2 weeks. So it's going to be for all type of traders. You get both the swing trader, are you a swing trader, scalper, or a day trader like me. So everything is going to be laid plain to you guys. So let's head straight to today's video. So guys, if you are new to this channel, do well to hit the subscribe button, like this video, share it to others that are really interested in trading gold. Don't keep it to yourself. Stop being stingy, guys. Share it to others. So before I even start explaining how the strategy works, I want you to know this: gold respects zones a lot. Yeah, gold respects structure, market structure as a whole. It respects it a lot. You can call it key levels, you can call it support and resistance zones, anything you call it. But just know this, that gold respects levels a lot. Yeah, it respects it a lot. Knowing that gold respects levels a lot, so I have like three major wave format that gold moves in. You understand? With like a major wave format that I've like through experience notice that gold like creating a lot of times. You understand? Number one, it's the normal wave format we all know. Let me show you guys. This is the number one the normal wave format, like a break in an uptrend, a retest, anyhow you want to call it, break, a retest, right? A break, a retest, you understand, a break and a retest. So clearly you know that this is an uptrend, right? This is the first wave format that gold moves in, and these levels are levels that I pay attention to. All these points, all these points, all these points, all these levels, they are points that I pay close attention to, because I know that through experience, when market comes back to this zone that is in an uptrend, if it comes back to this level, you always see a push to the upside, more like a resistance here, sorry, turn to support here, a resistance turn to support, you understand, in an uptrend. So that's one. Now let me show you another one too. Just take note of this wave format, because this is what we'll be focusing more on throughout this series, you understand. So take note of this, because this is more like the intro, you get. Now the second one, this is it here. The second wave format that gold, still an uptrend, a retest, an impulse move to the upside, a retracement back to the downside. Now it's pushed up, fell to break this particular point, came back down again. So this pattern, according to this pattern, this second leg is most likely the one that is going to break up this zone aggressively. You understand? So this is my focus zone. These are my focus levels that I pay attention to. That's the second wave format. So these points, if I'm on the trade of this point and it falls to break, coming down again, I might even most likely add more entries or still hold my entry, because I know that once it gives me confirmation here, then this one is most likely going to break. This happens a lot, even during news movement. Okay, so that is second. Now the last one happens mostly when the market wants to start consolidating, or when the trend is about to change. So this is it here, a push to the upside, still an uptrend, right? Come down, a break, a retest, right? A break. Now coming back, it failed to stop here, because somebody is supposed to stop here and continue to the upside, but now it comes down to this point. So in this kind of situation, your TP shouldn't be beyond this high, right? It shouldn't go beyond, because what is going to happen, the market might start consolidating, or it might just break, retest, and start going to the downside. So you see something like a big double top here, that you see like your retracements pattern, chart pattern, that is for retracements, you understand. So these are the focus level again, this point here that failed to hold, that it broke out. So in this kind of situation, your TP shouldn't go beyond this level. So that's the second wave format that gold moves in. So that is the three. So knowing these three, even knowing one out of these three, you are good to go. It can make you profitable, just trading one wave format. Now you have a reason why you are coming on the chart. I'm coming to the chart to see if this particular pattern, what I understand, what I knew is happening. If it's not, then I leave the chart, right? So now understanding, at least just try to master one of these wave formats, you understand, during this series that we'll be having. Just try to focus on one and you're good to go. Yeah, we have different setups, you understand, we have different trading setups, but if you can just focus on one and stick to that particular one, you will be good to go. So this is majorly for all the aspiring go trader, try as much as possible to learn this. Now, the conferences that we'll be focusing on this particular series, you understand, these are the 3 conferences that I use on gold, which is what we'll be talking majorly on. The first one here is, let's shift this. The first conferences that I pay attention to is trend line, like we all know. Second, F&R zone. Guys, trust me, you're going to enjoy this section. And the third, because I have 3 major conferences, would also add other ones, minor ones, but I have 3 major conferences. And the third one is psychological level. Levels. Yeah, you should know that. So this F&R, for those that might not know, let me put the meaning there. It stands for frequency and recency. So that's what it stands for, frequency and recency. So now we can either add things like Fibonacci retracement, we can add moving average, but I normally don't use indicators on my chart. I used to use them. If you notice on my previous videos, you'd see it there, but I don't use it again. I just like my chart being clean. So these are the 3 major conferences. So let's go to the chart. Let me show you something. So number 1, you already know how, because this class, I'm not making it more like a beginner stuff. Yeah, no. So it's more like an advanced strategy on gold. You understand? Advanced, you should already know the basics already before you even dive down to this particular video. Before you even start jumping in, you should know the basics already. It's not for like a total beginner. So now you already know what trend line is, how to plot trend lines. Sorry, let me delete this. So you already know how trend lines are being drawn. It's just identifying peaks. You get peaks and troughs. Troughs are the one below, maybe here, or these troughs. These ones below are the troughs. You understand? So that's the different peaks for the high. You understand? You can call it the highs, the lows. You understand? So it's just like that, trend lines you get. So people have different ways of, some people pay attention to weeks, some people pay attention to the body of the candle, but mine, I don't really look deep to that. Mine is to draw it perfect. I just scatter for most touches. You understand? Even if this touch is on the week, yeah, I still count it in. You get, even if it's on the body, I still count it. The main thing here is to make money, right? The main aim is to make money. So the trough are the ones below. It might be something like this. You get, so even if I wanted to scatter for more touch, I would adjust it to here. So you see like a touch here, a bounce here, a bounce, then a broke out of that particular level. So trend line, that one is out of it. You get, you should already know how to draw trend lines. So now let's talk on how to plot psychological levels on gold. So I have a video that I did on how to plot psychological levels on gold, but let's do it in today's video. I used horizontal line. This is where you can get it, horizontal line. Yeah. So first, you should know that psychological levels are like random numbers. They are like whole numbers, levels that big market participants or like hedge funds pay attention to, like big market participants, you get. So those are the points they pay attention to. So they are like random numbers. It's just like you going to the market and you're in Nigeria, for instance, and they told you, okay, this particular thing is sold, like it's sold out for 100 naira or 1,000 naira, let's say, for instance. Just tell me, how much would you price it for? Be sincere, how much? You would see that you would only price it in random numbers. You might be like 500 naira. Once you sell it 450, 550, 800, 850, you understand? Those are random numbers. Why didn't you say 888 or 883? You get all those kind of numbers. So those are random numbers. So now, this is how I do my random numbers, right? First of all, you should be able to identify the first random number. Yeah. So now I take away this 19 in front. If you notice here, this particular point, you see 1920.3, something like that. So, but what I do is this first 19, I don't pay attention to the first 2 numbers. I pay attention to the other 2 after that first, that 19. You understand? The other 2. So you see 20. So the next one there, you see 30, 40, 50. All these things safe. You see, it's arranged already. These are psychological levels arranged already. I don't know how the chart does it, but it's arranged already. So 1920, 1910, you understand, but there is one in between. Remember, this is a bigger time frame. There is ones in between because I do mine 50 pips. Most people do just 100 pips, but anything that works for you, perfect. Yeah, you're good to go. But you might not be even seeing on this series, you might not be seeing it much on my chart. Only when I have entries, that's when I do it. You get, so we have 1910, 1900, but 1910 it's just like 10, 15, 20, 25, 30. So there are ones in between. Let's see if we can zoom it and it will come up. Let me see. It's not showing, so I'll have to plot. Okay, it's showing now. So we have 90, 95, you see, 1900, 1905, 1910, 15, 20. So those ones, because you see 18 here, 1860, 1865, 70. So those are psychological levels. You can use horizontal line to plot them out. Let's plot one out first. I don't want this video to be long, that's why I'm just going straight to the point. The main aim here is you understanding this and making money. So we've gotten one day. So it's 50 pips difference. You can use your ruler tool to measure it. This would direct me to the next topic on how to calculate pips on gold. So the next one is 50. So you see 5.0 stands for 50 pips. Yeah, 5.0, 50 pips. So let's plot the next one there. So you see that the next one is what? 1895.00. So you see 50 pips different. That's it. So now on how to calculate pips on gold, it's very simple, very simple. So now let's use this buy and sell order. Let's say, for instance, I want to sell gold from this particular point, right? I'm showing you how to calculate pips on gold, like very simple, because the main reason why you're understanding how to calculate pips is how to use this particular tool. You understand, you are learning how to calculate pips so as to know how to use it on trading view and know the risk percentage you are risking on a particular account, or the amount you want to risk on a particular account. That's why you are learning how to calculate your pips. If not, you could just go put any lot size and make your money, right? But now you want to know the risk effect of everything. So now let's say my stop loss. Remember, this is a bigger time frame actually, so but let me just use it. So now this is how to know how to calculate pips on gold, the simplest way. So now, you know, this stop here, 9.5 here, stop loss, because if you go to position size calculator, want to calculate your pips, the only thing they ask for is stop loss, right? Stop loss you get. So that's one. So now 9.5 here stands for 95 pips. 9.5 stands for 95 pips. So if I drag it down to 6 from year to year, now is 6.6, that is 66 pips. I pay attention to the first number after that dot. The other ones I don't pay attention to, the first and the ones in front. So if I drag it up now, you see 14.2, that is 142 pips. Very simple. That's how to calculate pips. 3.2, 20 pips. Drag it to, even if you drag it to become 0.7, is what? 7 pips. So that's it. So now the target side, targets 49.2, that is, you are risking maybe 32 pips here, 3.2 to get 49.2 pips, that is 492 pips. So the risk to reward is what? 1:15. It means, I don't want to talk on risk management first. Let's keep going. We are talking on strategy, right? So I'm just starting with the confluences first, trying to make you understand all these confluences now. You get, so we've talked on trend line, which is more like a beginner's part. We've talked on psychological level, and I've showed you how to calculate pips. So the next thing now is to talk on the F and R zone. So guys, that will be explained on our next video. So guys, if you are new to this channel, do well to hit the subscribe button, like this video, turn on post notification to get notified when I drop the next series video, which is on Friday. You get, and do well to share this video to others that are really interested in trading gold. Don't keep it to yourself. Stop being stingy. And that's it for today. Bye for now. See you guys on Friday.